Thank you, Mr. Garla. Thank you, Mr. Deepak, for joining me on the panel. It's a very, very interesting topic that is close to all of our hearts. But before we get deeper into getting all rich insights from our discussion, let me set some context so the audience also has understanding of what this topic is all about. It's a very unique topic, yield enhancement for banks. So why are we talking about this? TREDS, as you heard from Sandeep, is almost a 1 lakh crore Indian rupees of AUM. That's growing at 100% year on year. This is today almost 50% of the vendor financing market in the country. And vendor financing has been in India for decades now, and TREDS has yet to complete first decade. So this is already a product that is seeing huge adoption by the banking community. Now, if you look at next 5 years, this is supposed to be almost a 5 lakh crore opportunity at a very, very conservative estimate. Now, 5 lakh crore is a huge opportunity for all our banking partners to get a reasonable pie in the opportunity. So growth is not a challenge. But a couple of years back, when we were brainstorming with the banking partners, we were talking to Mr. Garla and the team, we realized there is a problem. And that problem is what we are seeing on the slide. If you look at the curve at the bottom, which is the green curve, this shows what sort of spread banks are making on the repo rate. Now, repo rate had been fluctuating, as you will expect. The repo rate has been fluctuating because of COVID, post-COVID, but net, the spread, the margin that the banks were making was a bit of a struggle. It was dipping from almost 2.66% of spread per annum that banks were making on an average on M1. In 22, it dipped pretty sharply. It dipped to almost 1.78%, almost a 90 basis point dip in 1 year. In 24, it further dipped by another 10 basis points. So net, almost a 100 basis point dip in 2 years' time is what banks were worried about. So we got down to what we do best. We took feedback. We brainstormed with the banking partners to see what should we do. And as part of that brainstorming, we came with 3 new product ideas. Number 1 was small to small factoring. Now, unlike the traditional TREDS where we have a large, well-rated corporate, what we do is in S2S, we have a buyer who is not rated. He's an MSME. But an MSME who has been working and being associated with M1 exchange ecosystem for some time. So it's a well-known MSME, may not be rated. And because of that, the yields are much better. Unlike the normal TREDS yields of 7 to 9% per annum, the yields we have in S2S is north of 11 to 15%. Now, that automatically shows up the average yield for the bank. The idea number 2 is what came because of fantastic efforts of friends like Mr. Deepak, TCI, Trade Credit Insurance. What we found is most banks were quite conservative in terms of their risk policies because there is a finite amount of capital. And when the capital is finite, it only goes to the most secured, safest assets. But the moment insurance companies came in a different risk capital. And that gave a lot of flexibility to the banks in terms of the risk policies, in terms of which assets could they fund. And that improved the yield further. And third was, why look at only the payable side of financing? The same anchor corporates also have the dealers, the distribution side, which again is more of MSME, and hence yields are better. Between these 3 ideas, we got down to implementation, and the result of that implementation is what you see on the right side now. Very interestingly, it's been a year and a half since we've been at work, and what it has done is it has helped the average yield on M1 exchange being improved by almost 45 basis points. And that's a fantastic outcome of what efforts have been made so far. And thanks to all the brainstorming and ideas that we've gotten from a banking partner. So that's a context on what can we do. And looks like we are on track to get back to the 2.66% average yield, average spread that banks make on a platform. Idea is to make opportunities bigger, Idea is to ensure that everybody sees a win-win. It's not a win-lose. So that's our context. And let me now get started with our discussion. So, Mr. Garla, IDBI Bank has been one of the first banks to embark on this journey of improving yield to ensure that it is not just a big opportunity, it is also a big revenue opportunity, not just asset opportunity. How has the journey been for the bank? What have been the key focus areas as you looked at this as a bank, brainstormed on it? How has been the results so far? Any early wins? We'll be very excited to know about you.
Thank you, Amit. Good evening, everyone. At the outset, I would like to congratulate M1 Exchange for completing 7 wonderful years of existence and wish you all the best for remaining years. Coming back to your question, yes, so far, to make it very simple, journey has been wonderful. But just before getting into this one, just want to set the context. Expectations are very important. From TRED's platform, internal expectations are that nothing should be there in SMA, nothing should be there in NPA. So that is the first primary requirement. Second is actually, whenever we discuss entire platform as well as products, everything has been designed in such a way that actually we should not get into even SMA 0 zone. So primarily, entire ecosystem within the bank, we were focusing more on AAA and AA, a very small portion, and no one has this one on a yield. Primary purpose is, do PSL, that is a primary purpose. I will get a benefit of PSL. And of course, top line, little bit, whatever was there, you do more than what you were doing last year. And yield is not very important, actually. Then in the process, actually, one of the incidents, we had some bad experience of about 12 crores becoming a NPA on the platform. May not be on your platform, but on a TETS, this one. So that time we had a very bad experience of meeting all stakeholders within the bank. So primarily what we did is, I think we should avoid, because expectations from TREDS is we should not have anything in SMA 0 zone also. One day overdue also should not be there. So primary purpose is to move to higher quality assets. So then we moved from say A rated BBB to AA and AAA rated. But in the process of moving there to address that issue, I think yield has taken a lot of beating. Then actually we had a lot of introspection, and of course we had interactions with Amit, Sandeep and entire team. So we thought actually, this basic Kaizen has to be there. We should not allow to dilute our risk. But at the same time, I think we need to increase the yield. Top line is not very important for us. So PSL, of course, we need to have a PSL requirement. Second is yield is a priority. Third one is, of course, top line and doing more business than what we were doing last year. So these are the priorities we have kept. So accordingly, what we did is, again, without diluting a risk, without diluting a hygiene. So accordingly, I think after interactions with all of you, so then we designed in such a way that actually dilute a risk, maybe instead of focusing on a AAA rated, bring it down to AA, A and BBB, and BBB also with, taking a help of our friends, so that actually, risk is not there on the bank. So that way it has helped us to improve overall yield. Of course, you already covered it up. One is diluting instead of focusing on AAA and AA, then we moved to A and BBB. Today's context, I think from AA and AAA used to be almost like a 90% of our portfolio. From there, we have moved 90% of A and B, BBB. So that way, completely risk perception within the organization has changed. I think to that extent, TC has helped us to take such a decisions. Otherwise, there was a lot of resistance to go for BBB cases. And if you see spirit of RBI circular, entire purpose of introducing TCI was actually to meet 17% unmet demand actually. So too many banks were chasing AAA, and actually there on the other side there was an unmet demand of approximately 17 to 18%. So we thought actually somehow I think instead of focusing on a AAA, let us focus on other segment where we can get a little more yield, and don't take any additional risk. That way we have worked with Deepak and team, and I think we have come out with this. In the process, actually experience has been very good. We continue to have a nil NPAs on the entire book, and the yield has gone up almost like 100 bips. One is this risk, another one is S2S. That also has helped us to improve yield, because here we might get a less, but on S2S platform, we get I think, as you rightly said, maybe 9 to 11% based on your risk profile, risk appetite. So I think overall in that context, I think overall yield has gone up instead of actually repo has come down. Normal course, it is expected that your yields will come down. From there, actually, our yield has gone up by, say, 80 to 100 bips. So I think...
No, fantastic and amazing story, Mr. Garla, and thanks for being very, very candid with your ideas, feedback, so that we could work together with you and the team. Any new initiative in a bank is always complex because it's a large organization, multiple stakeholders.
Correct.
As you looked at this initiative over the last 2 years, year and a half, how has the journey been for you personally? I understand that there are stakeholders, there are product teams, tech teams, legal teams, compliance teams, operations teams, which have to come together to bless any new initiative. So how has the journey been for you personally? What are some of the key challenges you faced in this journey over the last 2 years' time?
Yes, Amit. So basically it is a change of orientation, change of a culture. So threats means people were thinking, I don't want to take any risk. From there, I think taking a little bit of risk will help us to improve yield. So I think changing risk mindset, I think that's what is a paramount challenge. Then of course, remaining all things routine wala, we have to take to board, convincing the board from say AAA. I'm moving from 90% of AA to AAA to actually A and triple B, 90%. I think taking board confidence, I think that was very, very important. Then actually talking to our audit teams, compliance team, as well as product people. I think all this took a lot of time, maybe 3 to 6 months. And of course, interactions with all of you helped us to navigate those discussions. And of course, sitting with all insurance guys, understanding and onboarding. See, when a system is working so good on a digital platform, insurance part, I cannot take it on a manual process. Everything has to be on a digital platform. Say, getting a line from insurance company, it has to be digital. We cannot wait. I cannot give to him manually, and he takes about, say, months' time to approve insurance. I think that will not happen. So integration of all these things, it took some time. But I think largely we were the first bank to integrate, and I think so it has helped us. So overall journey is a very good experience, and it is a part of a normal process, whatever we undergo.
I agree. But what a fabulous journey it has been. Moving to Mr. Deepak, Tata AIG has been one of the early pioneers. You have been quick off the blocks in terms of development of this product, TCI, Trade Credit Insurance, on trades. I know IRDA came out with this sandbox way back in 2019. You were the only one to participate in the sandbox, successfully completed in 2020, filed for the product, get the approval, and now formally launched it. How has been the thought process for Tata AIG? You see a huge opportunity, while others have still been watching on the sidelines. So how has the journey been for Tata AIG and for you personally? Because you have been instrumental in this whole initiative within Tata AIG. It will be very helpful to know your journey, success stories, challenges that you have faced.
Sure. I think first of all, I would like to thank the M1 team for inviting me to the panel discussion and also wishing you the best, all the best. I think when you do well, we will also do well, and the banking fraternity will also do well. So it's do well for everyone. With regards to threats, yes, you are right. It was a very, very nascent concept, even from an insurance perspective. When IIDA did announce the sandbox regulation, I think we were the only insurance company who had volunteered for the sandbox regulation. And when we were about to experiment the same in 2020, unfortunately, it was an unfortunate COVID time. And hence, the experiment of the sandbox could not be executed at a level that we thought we would be doing. But nonetheless, within the 6 months time period, we did have some of the successful attempts with regards to some of the banks coming on board and doing the transactions. We shared those results with the regulator, and basis those results, then the regulator opened that for the entire market. So that was November 2021 when the regulator opened the market. We then filed the products as per the insurance norms. And then, as you rightly said, I mean, as a company, we have been pioneers as looking at new solutions, new opportunities. And with the same spirit, then we started engaging with the banking fraternity and the trades platforms. Like you, yes, there were initial hesitation as to what is trades, how will insurance help us, how will the entire system work. Thankfully, when RBI in 2023 allowed insurance as a fourth participant on the platform, that gave a lot of confidence to the banking fraternity. Okay, yes, this is now within the compliance. This is now, it is okay to do an insurance fraternity. Then, yes, we did engage with some of the banks. I think IDBI Bank was the first bank through which, we could close a policy. Though the policy was offline, but it covered their trades transaction across all the platforms. Closely on the heels of that, we also closed another large policy with another bank. But yes, broadly the thought process is, as sir rightly said, the thought process is to have the entire process end-to-end online process. And I'm happy to announce that I think we are very, very close, of launching that entire process end-to-end. Currently, even most of the processes are online, like we evaluate the limits, though offline, but yes, that limit is uploaded on the platform. So for the banking fraternity, NBFCs and factoring companies, the limit is available online. And we have also included the pricing mechanism, so you would be able to see what is the limit available. You would be able to see what is the pricing mechanism. You would also be able to see the policy copy. And the thought process is that the entire transaction should be covered within a matter of seconds or minutes. That is the dream that we have, and I think we are very, very close to executing that.
Wow, congratulations. What a vision, and congratulations on getting to that desired vision end state of being a complete automated digital journey. Look forward to this milestone soon. Changing gears, this has been the history of last few years of work. Looking forward, how do you look at the next 5 years? What are the opportunities? How big are they? And what will be the bank's focus in terms of this set of opportunities? And there is so much to do for the bank, Mr. Garla.
I think you have seen Sandeep presentation. So I think what we are touching is today, it is only just a surface. I think I strongly believe, I think it can go up by 10x. So as far as TCI is also concerned, I feel actually, it is just a starting point. I think most of the bank today, though I think only 2 banks are there, it is just a matter of time. I think most of the banks would be happy to come on this platform. So according to me, simple calculation. So whatever you were saying about lakh outstanding, so throughput is about 4 lakh. So premium of 0.28 to 0.38. So that sort of this one. So approximately. So it is like a 150 to 200 crores worth of business for insurance companies. So they will also push, and the banks also, I think, at least I have seen personally myself within the bank, how actually we can move from AAA to at least A, if not to triple B. So overall, I think it is in a very good direction. And in the larger picture, if you see, I think instead of chasing those people, we are actually getting enough money, AAA. I think through this product, I think we are touching where actually people are not getting enough money and still struggle to get, because MSMEs still gap is about 30 lakh crore. So I think that is available for everyone to exploit, and I think this platform is more or less standardized. I think this platform is the best platform to finance MSMEs. So I think personally, I think it is a great opportunity. I think most of them will look at and exploit all possible opportunities, especially on MSME to MSME, dealer financing, as well as, I think, gift city possibilities.
Fabulous. Look forward to all the interesting opportunities and working together on that, sir. Mr. Deepak, from your standpoint, insurance company, almost 150 crore of premium on the table for the insurance industry. You are the front runner, the fully digital journey ready. How do you look at this journey for next 5 years' time?
I think I'm looking at a number of close to 1,000 crores of premium, from this new opportunity. I would like to thank M1 Exchange. I think the team has been very forthcoming, whether the tech guys, the operation guys, and the entire team. The speed and the agility which I see in M1, I have not seen any other platform. So I am seeing at a premium of 1,000 crores, huge opportunity. While right now we are talking about M1, I think I can say now confidently that we would be extending 100% support to you on the S2S initiative. We would also be extending support to you on the ITFS initiative and any other initiative that you guys are taking within the broad boundary of compliance that insurance companies can partner with you. More than happy, and we are honored to partner with you. Even from the government perspective that you see, there has been a lot of focus on MSME. The government has taken a lot of initiatives, with regards to ease of doing business. Just yesterday, we saw 100% FDI in insurance being announced. So there will be more and more insurance companies. We are also seeing a lot of reinsurance companies, setting up branch offices in India. So there will be a lot of insurance demand. There will be a lot of insurance supply. And as a company, while we're talking more of AAA and A and B, I'm happy to announce that we have also extended insurance support for unrated companies. Thankfully, being the largest TCI company, we have a database of close to 20,000 buyers. So we're just not guided by the external ratings that we have. Definitely that is important. But we also have our own payment mechanism. We have the payment history, wherein we use our internal algo. And yes, we can also provide you insurance support for unrated entities beyond the AA and AAA. So more than happy.
Very, very interesting to hear this. Now, I got the signal from the moderator and now heard loud and clear. Thank you. But before I wrap up the discussion, one question from the audience for our esteemed panel. Any one question? Yes, please go ahead. You leave the mic, I guess.
Hi. Myself, Vivek Gujarati from SBI. My question is from Tata AG Insurance. Regarding, if there is any default, right, whether the insurance company will settle the claim or based on whatever information is available on exchange, because I was told there is a surveyor and he will survey then, a lot of information, because we don't know what is the background, the buyer and seller relationship. It is just a discounting which is taking place on the platform. So any thought on that?
So you're right. This was one of the challenge also, when we were designing the TCI policy for the TREDS platform. Normally that you see in the conventional TCI, there is a waiting period of 180 days. Now the same concept would not work for the banks and financiers, because beyond 90 days, then it will be classified as NPA. Hence, we redesigned the overall concept and we said, that we will settle the entire claim within 90 days. Thankfully, being an online platform, there's a lot of transparency, a lot of documents are already available, so we'll not need to appoint any surveyor. We anyways also have the buyer acknowledgement. So with the least amount of documentation, transparency online, the claim to be settled within 90 days so that it can help our banking fraternity.
This is an outstanding value proposition for the banking industry.
As on date, he's sitting with the nil claims.
Yeah, the anticipation is that there will be no claims, but yeah, worst case there will be a 90-day settlement process. Yes.
My question is to Mr. Nagaraj. How did you manage to get to zero NPA, sir? This is a very interesting insight we would like to know.
It's all on exchange.
I think we have put in place risk management practices actually. Not only last 1 year, but from the day one. And the entire trades platform experience has been very good. And touchwood, though, we just got in and we could recover entire amount, the SMA 0 time itself. But I think nil NPAs, touchwood, I personally feel my our team is managing well, and it is a part of, say, based on your banking experience, you know what to pick up and what not to pick up. So I think put in place what exactly you want to do. So simple techniques what we have given is don't pressurize them for targets. This is what is a expectation on a yield, and this is what is the growth we require, and entire freedom is for them. And we have put in place actually onboarding of a customer. So it has to be approved at a senior level. And for MSMEs, what we did is there will be a lot of resistance internally to approve MSME to MSME because it is the first time and it is a high risk. And the audit, everyone was raising eyebrows. So we thought actually committee will approve. So at a very senior level, which is headed by EDs, we have put, and onboarding of MSME to MSME, it happens through that committee. That committee meets weekly once. And I think every week we are approving at least 10 names. So I think we have captured at least 15% of onboarding of MSME to MSME platform. I was discussing with my team, at least why not 50%? Why only 10%?
Thank you. Thank you, Mr. Garla. I know the audience will have a lot of questions for this very, very esteemed panel and very rich discussion, but we are running really short of time. So I will just take a minute to do a quick wrap-up of what we've discussed with your permission. The 5 points that I could keep as takeaways from my perspective is one, very clear belief that the 5 lakh crore plus of trades opportunity is something that the banking community is ready for. With support of TCI coming in, that becomes even more doable target, and we can do even more. From insurance perspective, 1,000 crore of premium is what the insurance company is looking for. Number 2. Number 3 is a truly digital journey for insurance companies participating with banks on trades will be a reality soon, with it the bidding happening on the platform, premium being paid at the FU level, invoice level. Number 4, it is not just trades on a rated buyer. Even the S2S, small to small, or less rated buyers, something which banks plus insurance companies are ready to partner for. And last but not the least, dealer finance and import-export financing, something which is also up for grabs, and that's something which the banking community and insurance companies are ready for. So with that, quick takeaway. Ladies and gentlemen, thank you for time, and thank you, Mr. Garla, thank you, Deepak, for being with me on the panel.